My name is Dr. Ola Brown. Welcome to my 2025 Global Economic Outlook. I'm going to start with an introduction and tell you a bit about me. And then I'm going to go through my 2024 predictions and see what I got right and what I got wrong. And then I'm going to go into the 2025 Global Economic Outlook before making some recommendations, tell you a bit about what I do, and conclude. So about me, I'm an experienced venture capitalist. Before that, I was founder of the largest emergency services company in West Africa. Right now, I run HealthCap Africa, which is one of the leading health tech and fintech investors in Africa. We invest in early stage companies across Nigeria, Kenya, Egypt, and South Africa, and opportunistically in Francophone Africa. Right now, even though we're still raising the fund, we have a portfolio of nearly 20 companies, creating 2,000 jobs, with operations in 12 countries. And nearly 50% of all of the founders of those companies are women. In terms of my academic background, I'm actually a medical physician by training. So I studied medicine and surgery at the University of York. I did my master's degree in finance and economic policy from the University of London, focusing on microeconomics, macroeconomics, capital markets, financial markets, and banking and bank regulation, as well as the IMF and how that relates to economic policy. And currently, I'm doing my PhD in finance also at the University of London, and that's focused on monetary policy transmission mechanisms and their relationship to digital currency innovation. So how monetary policy transmission mechanisms will be affected by central bank digital currencies, and a bit about cryptocurrencies as well. I've authored 5 books and several market reports, including Healthcare Financing in Africa report and the Healthcare Unicorns report, as well as a social impact report for HealthCap. I have a huge range of video courses on my YouTube, on project finance, on venture capital, on bank regulation, and on macroeconomics and microeconomics as well. So introduction. I spent this year, because I've been fundraising, I spent a lot of time in America. And, traveling from state to state really helped me understand American exceptionalism. I don't think there's been an empire like America since the Roman Empire, and that's why I have this Spartan woman on the slide. And what interested me the most is what Africa can learn from America. And also, it helped me understand why almost every economic outlook that you sort of read or watch focuses on America. But I'm going to try and make mine a truly global economic outlook because, other countries matter too. So I'm going to start by looking at some of the reflections or predictions that I made last year, and then go into what I think is going to happen this year. So 2024 Global Economic Prediction Reviews. Hey. Disgrace. Okay, so I predicted rising energy prices and also continuing tensions in what was a new-ish Chinese property market crisis. So with rising energy prices, I predicted that the war in the Middle East would make energy prices rise, particularly crude prices. And the energy sector actually in Q1 returned to the top of all sector returns in Q1 with a 13.5% return. And that was driven by rising oil prices with relative demand during the quarter. And the trend was sustained actually during Q3 and Q2. So oil prices did rise, so that was interesting, and mainly also because of geopolitics. And then I also said that the Chinese central bank might have to intervene in the property market crisis. A huge percentage of Chinese GDP, I think it's almost 20%, is made up from the property market. So again, yes, China attempts, Bloomberg published in 2024 that China attempts to end property market crisis with a broad rescue package. So the central bank and the central government did have to step in to try to stabilize the economy because of the property market crisis. I also spoke about inflation and interest rates, and my prediction was that I analyzed in my last video 150 years of interest rates, and it just looked like 2020, 2021 with those interest rates at zero were anomalies. And my prediction was we're just never going back to that. We're not going back to that in the near future. So not never, but we're not going back to that in the near future. And I predicted that interest rates would remain higher for longer, meaning that we would stay above zero for a pretty long period of time. And that definitely happened. US Fed kept interest rates at a 23-year high. We've now entered a cutting cycle, but I think that cutting will be moderated, and I don't think we'll see a return back to zero. I also made predictions about capital allocation, particularly to the venture capital asset class. As a venture capitalist, I'm interested in all asset classes because we compete for capital against all asset classes. We raise money from family offices. We raise money from institutions that invest across asset classes. So I always bear in mind that we're competing with all asset classes and we should know about all other asset classes. So that helps us sell the venture capital asset class better. And what I predicted was in terms of capital allocation, we would still find that less global capital would be allocated to our asset class. And there's a news item there saying global VC investment falls to the lowest level in nearly 7 years, right? And if you look at deal value and deal volume compared to 2023 and 2024, you can see it mostly dropped. And if you look at the map all over the world, again, venture capital, deal volume and deal value dropped, except America, where it rose. But when you take out AI, which I'll be speaking about a bit later, you find out that it kind of stayed on an even keel when you exclude the AI sector. So I also predicted that the influence of the BRICS countries, which is Brazil, Russia, India, China, and South Africa, would increase. They held their conference in October this year. A few other countries have also joined BRICS, either as sort of primary members or tier 1 members or secondary members. And that influence is continuing to increase as predicted. I also predicted the rise of Arab money. So the role of the UAE, the role of Qatar, the role of Saudi, and you can see the massive investments in tourism and diversification that Saudi has made this year. It's been all over the news. You can see also the rising influence of Qatar in terms of negotiations towards peace in the Middle East. And I was at the Milken Conference, the Middle East and Africa Milken Conference, so the one that's held in Abu Dhabi, not the one that I was in LA as well, but particularly referring to the Middle East and Africa Milken Conference, which is held in Abu Dhabi. And we saw one of the most influential men in finance, actually, the leader of the Mubadala, which is the sovereign wealth fund, talking about the fact that even though the general trend that he's seeing in the rest of the world is deglobalization, so people are pulling back, people are becoming more protectionist, people are retreating into their home markets, he really made a bold statement at Milken. He said, you know, that for us in the UAE, we're going to continue to invest globally. He said, we're doubling down on India, we're doubling down on Asia, we're going to continue to look at how we're going to invest in Africa. Going into the Abu Dhabi Finance Week, the billboards read, Abu Dhabi, the capital of capital. So I think the rise of Arab money and the continuing influence of the UAE, Qatar, Saudi Arabia cannot be underestimated as they really become, as sort of a group, the capital of capital. I also predicted that in periods where there's geopolitical instability or geopolitical risk, the number of IPOs goes down, so the volume of IPOs goes down. But the quality of IPOs that do come to the market are pretty high. And one of the most high quality and notable IPOs that we had this year is the IPO of Reddit. And I've put this picture of Alexis Ohanian and his wife, Serena Williams, it was a big celebration in the tech industry. This was, you know, an IPO that we'd all been waiting for. And one of the sort of selling points of Reddit was the influence that it's going to have on AI training. So people say that there's no problem, whether it's spiritual, physical, psychological, or emotional, that somebody hasn't had on Reddit before. It's the town square for people's problems. And that's why for AI training or people training these large language models, it has become really, really attractive in terms of really understanding the context of the human experience and making AI sort of more human in terms of understanding human problems better. And that's why Reddit was a part of the justification for Reddit's valuation and its continuous sort of creation of value. I also was really, really bullish on the African tech market. I said that there'll probably be a new unicorn built this year or born this year. And we did have one. We had MoneyPoints, which is a cash transfer startup, raised money, $110 million in equity from private equity firms like DPI and Verod, giving us a new unicorn this year. We also had a unicorn. So this was MoneyPoint is a Nigerian company. Time Bank is a South African company and African fintech. That one of its investors actually was Nubank, the largest fintech in Brazil. And they invested in Time Bank, cementing its status as a unicorn. So we had two really high-profile unicorns born in Africa this year, which is, again, really, really exciting. Just some of the reasons why I'm so bullish on Africa. So by 2100, Nigeria, where I live, is projected to overtake China, making it the second most populous nation in the entire world. Also by 2100, Africa is going to have 8 times the population of China. So just the demographics are, mind-boggling in terms of, the sort of numbers that we're thinking about. Africa is the fastest growing population in the world right now, the youngest population in the world right now. And I believe that human capital in some way, shape or form, despite the advancements in AI and robotics, will always be relevant. So if you were going to take a bet on the largest economies in the future, I would definitely be betting on Africa because, economic growth doesn't always follow population growth, but it usually does. And I've spoken about the Roman Empire. I'm a bit obsessed about the Roman Empire, or obsessed with the Roman Empire. A lot of hypotheses, especially from historians, actually say that the Roman Empire actually fell because of population decline. So even if you think historically, a shrinking population like we see in Europe, like we see in Asia, like we see in America, is bad news. The wealthiest man in the world, Elon Musk, continually talks about the problem of this falling birth rate and the economic consequences of that. And that's one of the things that makes me so bullish about Africa, having an average age of like 19 to 20, young, vibrant, smart, fast-growing population with fast-growing internet access, fast-growing mobile access is sort of like the perfect combination you need for future economic growth. And that's why I'll continue to bet on the continent. Anyway, back to my global economic outlook. I'm going to be talking about monetary policy, geopolitics, the energy sector, and tech and innovation. And while last year I concentrated on monetary policy, this year I'm going to be putting the most emphasis on geopolitics. But I'm going to start with monetary policy and then geopolitics, and then I'm going to move into my analysis of the energy sector and finish with my favorite, what I spend most of my days doing, which is technology and innovation. So in terms of monetary policy, I'm predicting a soft landing. Global inflation is forecast to decline steadily, with advanced economies returning to their inflation targets sooner than emerging markets and developed economies. I think we're going to have a soft landing. Bar any sort of black swan events, I'm not predicting any recessions in developed economies, although there may be reasons why there may be a rebound type of inflation, and I'll discuss that in the geopolitics sector. But my overall prediction is that interest rates will continue to fall, bar any factors that cause this rebound inflation. So that's good news. It's good news for America. It's good news for the EU because low interest rates drive growth. People find it easier to borrow when there's low interest rates. When businesses can lend, they can expand their businesses, they can employ more people, and they can grow faster. So I'm super excited about the trend of falling interest rates across the world. Like I said, these rate cuts, the European Central Bank is expected to follow the trend of rate rate cuts, meaning that there's more money for businesses. But the reason why they were raised in the first place was because of this problem of inflation, and people wanted, or central banks wanted to take money out of the economy. But it seems like inflation is stabilizing. Obviously, we've seen in Brazil that Brazil cut rates really early. So they entered their rate cutting cycle before most people. And they found this problem of persistent inflation. So they're probably going to have to raise interest rates again. I'm not predicting that this will happen in the rest of the world, but there are some factors that could influence that I'll talk about in a bit geopolitics next. On to geopolitics. I don't think any economic outlook produced for 2025 can be produced without talking about tariffs. It's the big T word of 2025. Donald Trump's trade agenda includes tariffs. And there was a lot of talk about tariffs on the campaign trail. It's one of his biggest campaign promises, and he will most probably be implementing tariffs when he gets into office in January. Now, one thing that he's been very clear about is tariffs on China. What he's been less clear about, but has mentioned, is tariffs on Mexico, which is a big food producer for the US, but also tariffs on the EU, which is also a big exporter, as well as tariffs on China. Now, I'm saying tariffs on, and that's a very common sort of, I think when I say tariffs on China or tariffs on Mexico or tariffs on Canada, it doesn't really communicate what we mean to communicate, which is it's not China or Mexico or the EU or Canada that is paying these tariffs. It's US companies. They pay higher prices because of the tariffs placed on this company, on these countries. So they pay higher prices. US companies pay higher prices to import goods from these places, making it more expensive for them to import. And we saw tariffs on China during the last Trump administration. And I think by and large, most importers were able to absorb those tariffs into their margins so that it didn't cause high inflation or high prices for the US consumer. However, if you're extending those tariffs to the EU and Canada and Mexico, I'm not sure that the importers have the power to absorb all of those in their margins, and they will have to pass that cost onto the US consumer, which means higher prices for the US consumer, which means inflation. However, on the flip side, tariffs are an economic tool. And the reason that tariffs are used are to boost domestic production. So when it's too expensive to import, it makes people try harder to look inwards and see what they can produce. So on one side, we have the tariffs solely talking about tariffs on China, where I don't think it will particularly affect the US consumer. I think that importers will be able to absorb those into margins. I don't think they will cause inflation or like high levels of inflation. However, the broader set of tariffs affecting more of the world probably will. And that makes my prediction in the last set of slides on monetary policy a bit more complex. Because if prices raise, then the predicted cutting cycle that I mentioned probably won't happen as efficiently as the Federal Reserve or the central bank in America struggles to get this inflation under control. For China, I think China's reliance on US exports has actually gone down. It was about 6% a few years ago. It's now 4% of GDP. So 4% of GDP is still significant for China, but they've managed to systematically reduce their reliance on the US economy and have, boosted their regional relationships, have boosted their relationships with Africa, as we all know, and have boosted also their domestic market, so they're not overly reliant on exports. It's still going to be a hit to China, and the Chinese yuan may experience a further sort of devaluation in its fair value driven by the deterioration on the current account. And also conversely, the US might experience further strengthening over the next 6 to 12 months, supported by economic growth and obviously interest rate exceptionalism. The second big geopolitical issue is mass deportations and their economic impact. And Trump has promised that he's going to be tough on immigration and he's going to deport a lot of people. Now, estimates show that probably all the estimates that I've read have put the number at about 8 to 10 million undocumented workers currently in the US. And this represents 10% of the US workforce. So imagine the economic impact of deporting 10% of your entire workforce. Now, the undocumented workers tend to do low earning jobs. So they do the cleaning, they take the garbage out, they wait tables, they work on construction sites, they do agricultural jobs that, Americans will do, but they'll charge a lot more for that labor. In fact, I've read estimates that the growth that America has seen in terms of its workforce productivity and the growth, because, when you have economic growth, there's a sort of directly proportional relationship with labor growth as well. You have to increase the labor supply generally to increase economic growth, particularly in sort of labor intensive areas like hospitality and like agriculture. And these undocumented migrants have really been sort of quite important in driving the economic growth and producing that increased labor and economic growth that we're seeing in America. So this could contribute again to some inflation. So we could see that actually the deportation of 8 to 10 million undocumented workers, if it happens, 10% of the workforce, could mean that all of these businesses that relied on these undocumented workers will now have to look for higher paid alternatives to do those same jobs. And they will have to pass on that price increase to the consumer. So this is another thing that could be inflationary in the short to medium term in America. But then there's a counterbalance to that, in that one of the things that Elon Musk is doing and one of the things that Donald Trump has promised is a smaller government. And that might mean actually cutting the size of civil service quite significantly. So while a lot of people are being deported, there may also be quite a few people coming back onto the labor market. However, I think that you'd agree with me that sort of college educated, sort of super smart civil servants may not find the jobs that the undocumented workers were doing particularly attractive. So we'll have to watch this and see how the US balances the potential inflationary effects of the combined inflationary effects of both the tariffs and the deportations, potential mass deportations, with its overall goals for economic growth. The End of Globalization is a really dramatic title for this slide. But what I wanted it to communicate is that there are geopolitical tensions that are expected to reshape the global economy and drive regionalization, economic decoupling, and supply chains, as sort of supply chain shifts. So we are seeing a move like Kaloum, I quoted Kaloum, the head of Mubadala, the sovereign investment funds of the UAE, or one of the sovereign investment funds of the UAE. I quoted him in saying, while the world is becoming more inward facing, while there's more protectionism, why there's deglobalization, that the UAE and probably Qatar and Saudi are becoming more outward facing and really aiming to fill that gap that the West is creating. But still, there's this overwhelming feeling that the global economy and global economic forces are being reshaped and will be significantly reshaped as we go through the year with this trend of protectionism and deglobalization. On energy. So on energy, I'm really neutral in terms of my outlook for oil prices. I think that growth in oil production is going to be driven mainly by non-OPEC countries, but I don't think there's going to be huge fluctuations in the price of oil this year. I think global oil demand is expected to sort of maintain its momentum. The global demand for oil is about 100 million barrels per day. And that is pretty steady. Even during COVID, when people weren't flying, when people were at home, so they weren't driving, guess what the global oil demand dropped to? Any guesses? So I said it's 100 standard today, it's 100 million barrels per day. So guess what it dropped to during COVID? 80 million. So it only dropped by 20 million barrels, even at the height of a pandemic when people weren't flying and people were mostly at home. Because what happened? There was a stimulus checks, right? They were stimulating the economy, governments were stimulating the economy. And those people that got their stimulus checks immediately went onto Amazon and ordered stuff. And those trucks still needed petrol to deliver their stuff. People were ordering food. So because of that, the global oil demand is pretty sort of pretty stable, in my opinion. And in terms of like people expecting an oil surplus, I really don't think so. I don't think this year. I think that the OPEC has sort of cut their targets, so they usually, slow down and sort of cut allocations at the beginning of the year as refineries are going through maintenance, etc. So I don't think we're going to see a surplus. I think there's rising demand in some of the emerging markets as population grows. I just don't think it's likely to diminish in the short term because we haven't found cost-effective ways of replacing our demand for fossil fuels. Obviously, in the long term, this could change, but in the short term, I think that there's uncertainty, but I think there's going to be stability. Again, barring, another war, another big global conflict, another big set of sanctions. The US has hit its record. The US is now producing more oil than any other country has in history. The US produces over 30 million barrels of oil per day. Compare that to Nigeria, which really struggles to eke out about 1.5 million barrels per day. So the US is still going, weirdly enough, this was under Joe Biden that they went up to 30 million barrels a day. So the Democratic Party is actually known for, really caring about the environment, being very, very passionate about climate change. But somehow the oil industry and oil production still reached its peak under the Democrats. They might be able to eke out a few more million barrels, but I think really this is close to peak oil production for the US. Tech and innovation is a different story. Again, unless you're deliberately excluding him, I don't think any economic outlook can be complete without talking about the influence of Elon Musk and his influence on technology investment. And I really think that he's going to usher in a golden age of technology in the US. I think he is, some people call him the first friend, some people call him the first buddy, some people call him the unofficial prime minister. But what we can say is Elon Musk's influence on government is very real. And don't forget, we have a former venture capitalist as vice president in America. We have, venture capitalists as probably the most tech-orientated government that we've seen in a long time. So we're going to see investments in space exploration. We're going to see sorts of investments in AI and quantum computing. We're going to see investments in health tech, particularly Neuralink and their brain implant technology. He's also going to have influence over government spending. He's head of the newly established Department of Government Efficiency in the US. And that means that they're really going to start cutting down on government waste, start sort of really scrutinizing the way that government spends its money and hopefully really driving efficiency in terms of government spending. But yeah, I really think that he's the most influential oligarch since the days of like J.D. Rockefeller. And I don't use the term oligarch in a negative context. I use it in a completely neutral context. I've lived in Nigeria now for over 10 years, and I've realized that every president has to have a kitchen cabinet. There's always somebody whispering into the ears of your president. And it can be a smart person, It might be a not so smart person, but there's always somebody advising your president. And if you were going to pick out of all the people that could potentially advise your president, I would say, a formidable entrepreneur like Elon Musk isn't a particularly bad choice. My predictions for cryptocurrencies, I think Bitcoin is going to hit $120,000. It's already hit 100. And I think that that's going to be because the big boys are going to arrive. I've put the pictures of the richest men in Nigeria: Aliko Dangote, Tony Elumelu, Femi Otedola, Rabiu Samad, and Jim Ovia, because they're sort of the Nigerian big boys. But when I talk about the big boys arriving in the crypto space, I'm not talking about any of them. I'm not sure that their investment would really make such. I don't think they're even really crypto investors per se. I'm talking about the big American institutions, the asset managers, BlackRock, Alliance Bernstein, for instance. These kind of institutions to institutionalize cryptocurrency as a legitimate asset class, and they come in when they come in big, and they will be responsible for what I expect to be quite a large rise in the price of Bitcoin, which is like already a sort of pseudo-institutionalized cryptocurrency, as well as the top sort of 5 cryptocurrencies, I would say, including Ethereum, etc. In terms of capital markets and IPOs, again, I'm going to talk about quality. If you notice, when Trump said he was going to run, 2 of the most influential venture capitalists in the world, Andreessen Horowitz is one of the largest venture capital firms in the world, got right behind him. I can remember, Twitter was in a frenzy, X was in a frenzy that day when Mark Andreessen and Ben Horowitz, 2 of the most influential people in tech, got on their podcast and threw their entire weight of their firm behind Donald Trump and said that they would be supporting his campaign financially. They were one of the first people to do it. And one of the big problems that venture capital has faced is lack of liquidity. And that's a problem for Andreessen Horowitz, as much of a problem for Andreessen Horowitz as it is for a small emerging firm, right? So I do think that we're going to see high quality tech IPOs in 2025, driven by the influence of venture capitalists and tech investors on the White House. I don't necessarily think that it's going to be a huge volume, but I think we're going to have some really special companies going public this year, driven again by that need for liquidity and that oversized influence. And funnily enough, Silicon Valley and Africa have a really sort of connected relationship. So most of the money that has come outside the DFIs and outside sort of a few domestic investors and sovereign funds in Africa has come directly from Silicon Valley. A lot of the Series A, Series B, Series C money raised by African startups has come from Silicon Valley. So I think that this sort of boom in venture and technology and innovation in America will directly affect Africa, and that makes me super excited as well. India was actually the king of IPOs in 2024. So the Indian IPO market, including the tech sector, experienced a remarkable boom in 2024, with the number of IPOs soaring to like 70% and the proceeds skyrocketing by 135% compared to 2023. So while exits from venture capital in America mainly come from M&A, I would say that one of the things that I predict for Africa is that we're going to see a greater percentage of IPOs. Indian investors actually have a huge advantage when investing in Africa, because I think there's about a 5-year lag between what happens in India and what eventually happens in Africa. We have very similar markets. We have very similar sorts of consumer classes and consumer segments. And I think that when Indian investors come to Africa, it's like watching a movie that they've seen before. So one of my predictions for Africa is actually we're going to see more IPOs as a percentage of exits compared to M&A than America sees. One of the things that is really concerning is the gap between seed rounds and Series A graduation rates. And right now, There's a huge. I wrote a book about it. I wrote a book called Journey to Series A 2 years ago, and it was really that jump that startups have to make between seed and Series A, and I think that that's going to continue to be a difficult thing because Series A investors are more institutional. They have higher expectations in terms of corporate governance, in terms of financials, in terms of team. So that's going to be something for founders to continue to think about as we go into the new year. AI investment. 20% of venture dollars between June and August in America went into AI. 1 in every 3 VC dollars in the US goes into AI. And I think it's going to be a day of reckoning for AI in 2025. We've poured all this money into AI, and I think that, investors are going to want to see it coming out. I also think that there's going to be a surge in mega deals. A lot of money that was raised in 2024 has gone into big firms, not small firms. And those big firms have to write big checks. So we're going to see mega deals in 2025 across the world. And one of the things that I think is also going to happen is people that raised money in 2020, 2021, when there was a VC boom, are going to come back into the market. And they're going to have what I call shocking priced rounds. So in venture capital, for very early stage funding, so pre-seed and seed, most founders raise on what's called a SAFE. A SAFE has no valuation. So a SAFE has what's called a valuation cap, so the maximum valuation that it could be. And a lot of founders come to the market. I've seen like billion-dollar safes, not in Africa, in America. I've seen safes with caps of $50 million, of $30 million. And, a lot of them are going to come back into the market and are going to come into price rounds and realize that, the safe with the $30 million cap actually really has a $5 million cap. Has a $5 million, the company has a $5 million value. So I've put like the smiley face there when a founder is raising a save, and the shocked face here when they raise a price round. And I think that, as cash runways continue to dwindle, as there's more sort of scrutiny on valuations, we're going to see a lot more shocked faces as people come into their price rounds in 2025. And I don't classify those as down rounds because they never had a valuation in the first place. The valuation cap is not a firm valuation. It's not a price round. It's an idea of what the cap could potentially be. So I think that there's been a lot of people swimming naked, but as Warren Buffett says, you never know who's swimming naked until the tide goes out. And I think the tide will go out on some of these highly valued or highly safe noted startups in the year 2025. So what do I think in summary? What are the key trends to watch? Global inflation and monetary policy, as I said, I predict that the most likely scenario is we're going to go through a rate cutting cycle if we don't see rebound inflation due to the tariffs and the immigration policies. I think that there's going to be investment opportunities as people cut rates. People are going to move out of fixed income and start looking at equities, start looking at real estate. But the problem with real estate is stakeholders are very. So I've noticed that if you go out to look for a mortgage right now, they haven't priced in the rate. They're waiting to see if there's going to be rebound inflation. They're looking at those tariffs and thinking, no, I'm not going to cut rates right now. So even though rates are being cut, my PhD topic, monetary policy transmission, it's not transmitting into the real estate market as quickly as you'd think, because the real estate investors are a bit suspicious about real estate, about rebound inflation, and they're not quite ready to cut rates now. So they haven't priced in those rate cuts as I would expect that they would. But overall, I think we're going to see a trend moving from fixed income with more people looking to equities as interest rates continue to fall. I think there's going to be a lot of uncertainty. People are nervous. Tariffs, immigration, supply chain changes, deglobalization. There's a lot of policy uncertainty right now, and people are preparing for that and gearing up for that. And like I said, I think that 2025 is going to usher in a global, in America, and hopefully that will extend globally, into a golden age of innovation. We have a vice president in America who's a former venture capitalist. We have Elon Musk in the kitchen cabinet. We have Anderson Horowitz also being very, very close to the White House. We've never had a more tech-savvy American presidency. And I think that it's going to usher in a golden era of innovation. And since Africa is very, very tightly linked, our ecosystems are very, very tightly linked to the American ecosystem, I hope that that spreads to Africa as well. In terms of recommendations, remember, I'm not your financial advisor. I'm not your personal banker. This is an investment advice. This is what I think, bar any black swan events, people should be thinking about as they go into the new year. For founders, my big advice is to avoid empire building and really aim for sustainability, aim for profitability in your companies. I think the old VC mantra of growth at all costs is gone. People want to see sustainable companies. People want to see good unit economics. And what I mean by empire building is, I've written an article on it. You can check it out on my Medium. But it's really unnecessary spending before you've reached product market fit, or when you have what I call pseudo market fit. Until you have firm product market fit, I think the mantra should be nail it, then scale it. Don't scale it before you nail it. Second, for more retail investors, people with 9 to 5s, stay diversified. So look to have holdings in as many sorts of asset classes as you can, but never bet against innovation. So always have your portfolio, or for me personally, I always try and tilt my portfolio towards innovation, because technology is what moves the world forward. I'm not going to advise people to invest in crypto, but I'm going to say understand cryptocurrency economics and portfolio management, and how a cryptocurrency strategy might fit into your portfolio. And I have a great video. It's a 1-hour video. This is my PhD topic, so I understand digital currencies quite deeply. And there's a video linked below on the economics and portfolio management of cryptocurrency, using like the Sharpe ratios and all of the sorts of portfolio management terminology that you are familiar with if you are familiar with financial markets. Prepare for some volatility. So there is going to be continuing geopolitical uncertainty. And it's important for everybody, whether you're a founder or whether you're a retail investor, to be wary of that. And then my last piece of advice is for founders, which is similar to the first, really focusing on capital efficiency, lean operations. And this is for people that work in companies as well, managers, people in SMEs, for instance. Really focus on cost management, focus on lean operations. So you have that war chest to be able to overcome any market volatility that might come up during the year 2025. I'm going to speak a bit about my firm, HealthCap. We're a Pan-African investment firm. Our core mission is to promote assets that produce a healthier world. We invest in fintech and health tech. Our focus is on Nigeria, Egypt, Kenya, and South Africa. We invest opportunistically in Francophone Africa. Our portfolio companies have raised follow-on from some of the largest venture capital firms domestically here in Africa and internationally. And we've invested in nearly 20 companies, creating over 1,000 jobs. 12,000 indirect jobs, and really looking at early stage fintech and health tech. So if you want to learn more about health tech, if you're an investor, then email us at Investor Relations. If you're a founder and you want to submit your deck, email us at Pitch Decks, and that's our website and our social media there. So in conclusion, I've spoken about a lot of things. I've spoken about geopolitical risk. I've spoken about monetary policy. I've spoken about energy prices. I've spoken specifically about oil prices. I've spoken about politics. I've spoken about tariffs. I've spoken about immigration. But one overriding theme is from one of my favorite articles, which I'm going to conclude with some thoughts from. And it's a 2019 study quoted by the New York Times, which revealed that wealth in America is primarily driven by business ownership. So the typical rich person is the owner of equity. And that really is quite interesting, because it sort of makes everybody think about veering from fixed income to some form of equity, whether you're in a 9 to 5, whether you're a full-time housewife on an allowance from your husband, whether you're a full-time house husband on an allowance from your wife. whether you are a small business owner, always thinking about equity if you want to increase your wealth. And another key lesson that the article sort of talks about is the fact that money doesn't necessarily actually make us happy. And it highlights 5 things that do make us happy that we overlook and don't do enough. Number 1, human beings are happy when they're close to water, so close to a lake or close to a river or close to the sea. That makes us happy. Number 2, human beings are happier when there's sunlight and warm weather. Human beings are also happier when they have some form of physical touch, whether that's a hug or holding hands with somebody or having a massage. And human beings are happier and live longer lives when they have meaningful connections with loved ones, like friends or family. So I guess my last bit of economic advice, and this photo was taken on my wedding anniversary in November, is in 2025, make sure that you spend time in warm environments, next to a body of water, with your loved ones. And that will probably make you more happy than most of the investment advice I've given you in this video. Thank you.